A deadly mudslide in the mountains of West Papua has sent shockwaves through the global copper market.
I think the Grasberg incident is probably the most significant of the supply disruptions that we've had this year.
Over 800,000 tonnes of mud fell into the Grasberg block mine, killing 7 workers at the world's second largest copper mine.
It's a big deal in terms of the supply-demand balance, in terms of supply going forward.
The mine's US owner, Freeport-McMahon, is scrambling to recover the bodies of 5 workers and complete lengthy damage assessments. The Grasberg mine has faced controversy over worker safety, environmental impact and governance in the past. Copper is one of the most in-demand metals on the planet right now, an essential element in electrifying the world.
Around the world, the race for copper is intensifying.
A key component of electronics and EVs, last week copper prices on the London Metals Exchange marked their biggest weekly gain in a year, and prices have defied concerns about an industrial slowdown brought on by US tariffs. The Grasberg disaster is the latest in a series of major supply disruptions. This year, flooding at Ivanhoe's Kamoa-Kakula mine in the Democratic Republic of Congo, an accident at Codelco's El Teniente mine in Chile, and protests at Hudbay's Constancia mine in Peru form a list of significant supply disruptions in the copper market. But the loss of production at Grasberg over the next 14 months is estimated to be equivalent to the entire output of the world's third largest copper mine, the Collahuasi mine in Chile. The market has responded accordingly, with copper futures nudging historical highs.
This was probably the biggest shock to the system for copper, which you've seen the copper price already react on the back of it.
These supply setbacks have analysts declaring a deficit in the market and some big trouble coming down the line.
This will absolutely be a problem in 2, 3, 4 years when, if you haven't invested a copper mine now, you're not going to get the supply from that investment in 2 or 3 years, and that's where the problem is really looming.
Analysis by Barrenjoey's estimates the world needs around 1 million tonnes of new copper production each year to meet the growing demand. Over the last 3 years, just 500,000 tonnes per annum have been added to global supply.
These are big projects we're going to need, but the timescales to bring this on and the capital required, we're talking years, like we're talking 2030s before a lot of these projects go up and running.
Here in Australia, mining giant BHP announced it would spend $840 million upgrading Australia's largest copper resource, Olympic Dam.
Today, BHP is the largest producer of copper in the world, and we expect to double our current production by the middle of the next decade.
But better market conditions have also opened the door for mines to restart production. Cyprium Metals recently raised $80 million to reopen the Nifty copper mine in WA's Pilbara.
When the mine went on care and maintenance, the copper prices were between $6,000 and $7,000 US per ton, and today they're between $9,000 and sometimes above $10,000 a ton, so nearly 40 to 50% higher.
It's expected that mine will be producing copper by the middle of next year. But Australia cannot produce enough copper to fill the supply gap in the market.
The scale of them is not enough to solve that issue. So Australia can play a role, but I still don't think the projects that I've seen are enough to fix this problem.
Meaning Australian copper can't satisfy the insatiable hunger for copper in a rapidly electrifying world.